Welcome back, everybody. So today with the stock market, I was really struggling with a decision on a position that I had. Last week I talked about my AMD calls and how earnings was coming up and how I was a bit worried about how I was going to manage that position or how much I would lose as a result of that position. And I was kind of going into it with the diamond hand mentality. But the more I thought about it, I decided to actually close it down for a loss before earnings. And I'm going to talk about why that happened. And also, I thought it was just kind of interesting to kind of think about just losing in general in terms of the stock market. Like, it's interesting because, like, if you were to go to a casino and you were to go and you play blackjack and you start losing money, like that, those losses feel really real because you have to give them the cash. So, like, that money, you see it as you give it away. And the game has its own, like, checks and balances kind of thing going on. Like, you can't lose more than you came to the casino with unless you go to, like, the ATM and pull out more money. But, like, you can't sit down at the table and lose more than you came with to that table. Whereas with like the stock market and options, like there's nothing to kind of enforce that max loss thing, especially with margin. Like you can easily overplay, lose some money, and then you dip into margin and lose even more money, and then you end up owing money. Now, it's just kind of an interesting thought to think about, like how easy it is to make these trades when you just see the numbers on the screens and the disconnect that you have because you don't actually have to handle the cash. And it's just something to think about. So today I decided to close that AMD position. AMD was trading around 91, 90, 50, 91 in that area. And ultimately, I decided to close this down. So this was at like a 40% loss or so. Essentially, I asked myself the same question that tends to save me a lot of money. And that's if I was not in this play already, would I enter this position now? And the answer was heck no. I would not be buying out of the money calls before earnings and be dropping. Well, the value of this position at that time was about 3,400, I think it was. So I would not be dropping 3,400 on out of the money calls on AMD right before earnings. So that's why I decided that it's probably the best bet just to close this out. AMD went up a little bit and got back some of the losses, and well, I decided to take that loss and move on to the next trade. That I wouldn't even have to worry about earnings. What led me to that decision was that I was thinking that if AMD stayed exactly where it is, which is possible, so not even assuming that it goes down, if somehow the earnings report comes out bad, which I was very bullish on, but at the same time, like even good reports don't necessarily have to move the stock. So if AMD stayed where it was at, how much extrinsic value would be worth here? And I was kind of putting that at like 250 ish. And so I figured, let's go ahead and lock this out because I could get out for 425, whereas 250 is still an even bigger loss. And if I held through earnings, then I'd be even more tempted to hold on to that last like 250 times 8 until May 20th came around and just watch that just slowly bleed away. I like to kind of call that like the passive loser, just sitting there watching your account go down and just not being able to make a decision to lock in a loss, move on. So ultimately, I think this was a good decision for me to make at the time. Obviously, AMD like killed it on earnings. Where you like just look at this report here, like their sales jumped 71%. Uh, they topped 5 billion in revenue for the first time. They beat like just insane news. So what did the stock do after the market? Well, it moved up to $97. Like okay, fine. So I may have been wrong about doing that decision to close that, but you never know. But with earnings, you just never know. Even good earnings, it could have stayed flat. That's kind of the scenario that I was playing with in my mind. And something I thought was interesting to look at was how could you predict what those options would be worth tomorrow? Because option prices don't update after hours. So I was curious, like, how much money did I actually lose out now that AMD jumped up and my calls are about $2 in the money? So pulled up my favorite taste buddy here, Thinkorswim, and decided to look at the day after earnings when it didn't move down significantly because I know that plays with extrinsic value a lot. So my position would still be 16 days out. So I was curious what the extrinsic value would be. So at the time I closed the position, if I assumed AMD was going to stay flat, I was about $5 out of the money. Looking at this, I can go $5 out of the money. 1, 2, 3. Oh, sorry. 1, 2, 3, 4, 5. And you can see the extrinsic value would have been about 260. So closing for 420 versus 260, that's kind of where my mind was at for closing this position out before earnings. Now that we know that that position would actually be $2 in the money, we can see or kind of predict what that value would be by looking in the past and seeing how much extrinsic value would still be there in the contract that's $2 in the money. So right now it's trading at 123. This is a day after earnings as well. So like that IV crush that we're trying to get a feel for has already happened in this on-demand feature here. So $2 out. So the extrinsic value would be about 340, and the value of the option would be about 555. Maybe as high as $6 tomorrow at open, assuming AMD stays at 97 right now, which it might. It could very well just go right back down if we have a red market tomorrow and can be out of the money again anyway. So this is just kind of a way that you can think about what would happen with IV Crush the day after earnings. Is use these on-demand features, go like the day after earnings, and you can kind of see like what's the IV Crush look like. So let's go ahead and take a look at this real quick. So 128 we said is 267 after earnings, but what was this contract trading for before earnings happened? All right, so now we're on earnings, and we're looking at what the price was of something that's $5 out of the money before the earnings report. So 1, 2, 3, 4, 5. So it was worth $3.80, and that was worth like $2.70. So it lost about a third of its value just from IV Crush alone, if it stayed $5 out of the money. Now, obviously, my position did not go that way, but that's just the power of IV Crush. If like out of the money options will drop fast. And this is saying an option that's like a couple weeks out here. If you're doing like shorter DTE, which a lot of people do, like that move is going to be drastic. So let's go ahead and look at the 124 is at $4.10. We're going to fast forward one day. So at the money is $4.10. We'll let this buffer. That was pretty quick this time. So at the money, it lost half its value from IV Crush. So just something else to be aware of is IV Crush affects different options differently. If it's near expiration, obviously that IV Crush could be more drastic. And that's why if you're going to be going long, people tend to recommend going out further in time, which is what I was doing in my original play. But my original play was actually a zebra, where I ended up closing the short calls for a profit and decided to double up on the long calls to ride it out. And ultimately, I think my net loss could be like $1,700 on this position, but that's what happened today. So something I think I need to work on personally is working on my stop losses. Maybe go back to writing down my trades in a journal, predicting my stop loss, so I have that all set up. It's sometimes hard to think about where to pull out at if you don't do that beforehand. So don't think that you're an expert all of a sudden and like don't plan for those stop losses. Like that's something I should be using more often, I feel like. This position could have lost a lot less had I thought it through, I think, overall. If I could go back in time, what would I have done different? When I closed my short call, I think I should have closed my long calls and then maybe turn it into a sold put. That might have been the way to play the AMD after my zebra got busted and I was trying to get out of it. I think that may have been the way to play that bullish sentiment. I was still very bullish even as AMD jumped down to like 95, and that's when I decided to go long calls. I was still thinking that was going to be the low, but as you can see, the market has its own mind, and no one knows everything's going to happen every time. I hope you guys enjoyed this video. If you did, go ahead and share it, and I'll see you guys next time.